Many of the nation's biggest banks raising their dividends this after passing Federal Reserve stress tests. Morgan Stanley and Wells Fargo doubled payouts. Goldman Sachs, Bank of America, JPMorgan Chase also announcing increases. The lone exception was Citi. It kept its dividend unchanged, but did leave the door open for possible future increases. We'll keep an eye, guys, on the sector itself. The numbers are pretty big. I mean, Morgan Stanley, again, to 70 cents. $12 billion buyback plan. JPMorgan raised its dividend. I think it was about an 11% increase to $1. B of A, 17% increase to 21 cents. Goldman, 60% increase to $2. And you go on from there.
Very interesting.
Wells obviously had been far higher. They cut substantially into the pandemic. Now they were increasing dramatically. And, of course, as we mentioned, Citi, nothing. The question, Jim, though, continues to be, what about the market's willingness to pay a higher multiple overall for these earnings streams?
No, we have to see
and will that ever happen? Are we going to get away from sort of the idea of paying a multiple to book here and really just start to pay? Because that's the frustration. These things trade at, 7, 8 times?
Right.
Frustration on the part of their management.
We don't want tuna with good taste. We want tuna that tastes good. I mean, in the end, these are lacking growth. They lack growth in part because people want to see the easy money. They want to see the Fed raise. So let's not forget, as long as the Feds do it, look, they should be in there buying every share because the Fed is eventually going to have to raise. But my chap just looks at Wells, and we were hoping they're going to do a nice size buyback, $18 billion. But actually, I was hoping for 2022.
And that's going to take you through Q2 of next year.
Yes, but will they be there every second? Will they be there after they report? No. So when they report, I don't look. JPMorgan, it could report a great quarter, and I don't know if it matters. What does matter, if you knew that the Fed is going to raise, then you want to own these because they're in there buying back stock and they'll do well.
Yeah, but you talk about a lack of growth. I'll take a look here at Jefferies. Obviously, small.
Oh my God, that's different.
Small.
They're growers.
8%. I'm looking here, 19.1% compounded annual growth rate from over the last whatever the heck, a long period of time.
Well, that's a growth bank, and they're run by a very smart guy.
Yeah. They reported. Sometimes we get a little bit of a snapshot or a sense in terms of what we can expect from the capital markets activity for the big guys, because Jefferies did report after the close last night. And as you might expect, given the preponderance of SPACs issuance in the first quarter, that was down dramatically. Capital markets net revenues of $500 million down. But they benefited from M&A advisory, from leverage finance, and from traditional IPOs. And so they posted a very large investment banking number.
Gorman made a big acquisition. Gorman is doing a lot to be able to create an earnings stream. Your hair looks fine. Stop it.
Thank you.
Gorman's doing an earnings stream. He's got lots of good businesses, and he is no nonsense. By the way, Gorman, he doesn't seem to be in favor of the people who show up periodically.
You mean the work from home thing?
Yeah. I don't think he's into the, hey, I'm not coming in today.
Yeah, no,
the traffic was very low yesterday.
He wants you in.
Yeah, I think he actually wants to run a bank.
Yeah. Well, we are coming off the biggest week of outflows for banks since March of last year. Right, it has not been a good period as we reset some of these expectations.
But I think Morgan Stanley is trying to separate itself from the pack by being an advisory to individuals, including acquisitions they made to advise people who create IPOs, younger people. And by the way, come on, E-Trade. Robinhood's going to come public. We're going to have to give a new valuation of Morgan Stanley. Now, Robinhood that'll be something Gensler opined on, I guess, in payment for order flow. That's what they care about right now.
Shepard Smith here. Thanks for watching CNBC on YouTube.